With the new year just around the corner, you may be wondering, should I buy a house now or wait until 2025? This is a big decision and there are valid points on both sides, but I'm here to walk you through why 2024 might actually be a great time to make a move. All right, well, let's check out these 3 reasons why you might want to consider buying a home before the year is up. And stay tuned to the end because yes, I am going to address mortgage rates and home prices as well. Okay, reason number 1, right now, in this time of the year, there is less competition. The real estate market has cooled down from the intense buying frenzy that we saw a few years ago. With the upcoming holiday season, this also leads to a slowing market. What does that mean for buyers? The good news is that there is fewer buyers out there competing for the same home. So if you are ready to buy and you are in the market right now, it means less competition, which could impact the price of the home, the seller willing to negotiate, and or contribute towards your closing cost, which as we think about affordability and where interest rates are today, this could be a game changer. Reason number 2, motivated sellers. Listings are increasing in some markets across the country, and if there is a motivated seller out there, again, this would be a good time as a buyer because now they want to sell their house and they may be more open-minded to the terms that you would be negotiating. This could be repairs, this could be a temporary buy down to help you reduce your interest rate, this could be a permanent buy down, this could be a closing cost credit, this could also be the seller contributing towards the cost of your real estate agent. Now let's dive into this whole temporary or permanent buy down. What the heck do I even mean about that? Here's how they work. When you're looking to take out a home loan, there's going to be a set interest rate and there may be no cost for that rate. There may be a lender credit for that rate, and there may be a buy down, meaning that you are paying points, discount points, to buy that interest rate down. Now the strategy on how it all works, that's what we do. But in theory, I just want you to understand that there are ways that that seller contributing towards your closing costs could help you reduce the cost of your home loan. So there's a permanent buy down, meaning that let's say the seller is contributing towards your closing cost and the lender would use some of that contribution to buy the interest rate down. And then there's this thing called a temporary buy down. Same scenario, the seller's contributing towards your closing cost and the lender would be using part of that money to not do a permanent buy down, but to do a temporary buy down. And here's how it works. The most common temporary buy down is called a 2-1 buy down. And it would mean that let's say today the 30-year fixed rate on the note is 6.5%. In that scenario, on a 2-1 buy down, your payments for the first 12 months of your loan would be 2 points under whatever your note rate is. So in this scenario, that would be 4.5% for the first 12 months. The second 12 months of your home loan, your payment would adjust based on a 5.5% interest rate. And then the third and final year, your rate would be whatever your note rate is. In this example, that would be 6.5%. So it gives people kind of a runway with lower payments initially to get into that house, get familiar with the payment structure, etc. Now, what makes sense for you, again, is going to really be different on your particular scenario. From a lending standpoint, these are things that we go through and that lenders go through, honestly, or should be going through to kind of help you evaluate how best to use seller contribution towards your closing costs. Now, I haven't even gotten to point number 3 yet. And as you might be thinking, this sounds pretty good, Kelly. But if you're curious to see what you qualify for, just click the link below to schedule a quick no obligation call with a KellyZitlowGroup advisor. All right, another reason to consider buying now is the opportunity to start building equity. What the heck is equity? Equity is the difference between the market value on the home and what you owe on it, and appreciation is the difference between what you paid for the home and then the current market value. So let's chunk it down. Let's say you're purchasing a $500,000 house, you're putting $100,000 down, and you're financing $400,000. In that scenario, your equity is $100,000. That's as of today. Let's say go forward 2, 3, 4, 5 years. At that point in time, the market value of your home maybe is $600,000. In that scenario, now your equity is $200,000-ish, if not more, because you've paid towards the principal on that $400,000 loan that you took out. But the appreciation would be the difference between what you paid for the house and whatever that current market value is in the future, which in this scenario is $100,000. I know, why do I say all this? Because that's how we build wealth in this country, is through real estate. Now for the good stuff, the stuff that's all over the media and everybody wants to know about. Let's talk about mortgage rates. I know higher rates can feel intimidating, but don't let it scare you away from buying a home if you can qualify, and that's a big if. But if you are in a position to qualify, don't let that be the one reason that you don't purchase a home now. Because here's what we know. There's still a limited inventory in our country when it comes to housing. And right now we have a lot of buyers on the fence that maybe can't qualify, or they're waiting to see what's going to happen, especially with a new president coming into office next year. So that waiting is opportunistic for people that are ready to buy now. Because once those people get off the fence, meaning that those buyers come back into the market, that demand is going to increase. And then now we move back to more of a seller's market, which means that now the sellers are in control. They are likely going to negotiate less, give less contribution, if anything, towards closing costs. You may be in a bidding war like we saw a couple of years ago. So timing is everything. And honestly, I know it's hard to kind of sometimes get your arms around all of the naysayers and the media and everything else that's out there. But at the end of the day, it is important to know across the nation, we still have a shortage of inventory. And right now, we have buyers locked up on the fence, just waiting. Now, as interest rates come down, and when are they going to come down? I don't know. And honestly, nobody knows. We all have these charts. There's all these predictions out there. The likelihood of rates coming down is very good though. And so if you buy today and rates come down, you could look at refinancing in the future to drop that mortgage rate and reduce that payment if you're in a position to do so. If you wait to buy, it's not like in the future that you're going to be able to go back to today's point in time with regard to the environment, meaning willing sellers, current prices, etc. Right now, buyers are on the fence. And that is an important opportunity if you're ready to purchase a home. Take advantage of it. Let's talk a little bit more about home prices. As I mentioned, home prices are a point in time. Nobody has a crystal ball. Nobody knows what's going to happen tomorrow or next year. But because of that limited inventory prospect that we know exists in our country, it's not likely we're going to see a massive decline in home prices. So if that's what is holding you back because you're waiting for prices to drop by 20, 30, 40, 50, 60, 70%, the likelihood of that happening is not highly likely. That said, if you can afford a home today based on current prices and you can work with a seller to help you with the terms, price, etc., again, less competition means more seller incentives, which could get you into that home sooner than waiting to see. Because at the end of the day, nobody knows. I don't know. You don't know. The smart people on TV don't know. Nobody knows truly what's going to happen with home prices or interest rates. We believe we know. I'm giving you information based on the shortage, this housing shortage that we know that's documented. But really, at the end of the day, we have to have a place to reside. We need a place to raise our families, to go home to have control of, and to start building wealth in. If you feel like today is that day for you to take a peek and see if you can qualify, click the link below. If you're ready to explore your options, reach out. We would love to help you make your home ownership dreams come true. Just think, you could be starting off 2025 in your new home. We lend in 45 states. If you'd like to see if you qualify, call or text our home loan hotline at 480-725-0150 or schedule a call with the link below. It's easy to get started. It's basically just a conversation. Let's check it out.